Okay, gang, my name is Silas Peters with Trades Trending. You're here to see a workshop called Commodity Kingpins, and very, very excited about this presentation. This is a topic and workshop that is near and dear to my heart. It's kind of where I got started in my trading journey, my trading career. That's in the wonderful world of commodities, okay? And what I'm going to share with you today is not one opportunity, but several opportunities. And these are developing right now. And we are positioned in a handful of positions, and that's okay. I'm going to show with you some that you can still consider getting into. I'm going to share with some really, really exciting data. Now, some of you may not get excited about data, but I'm going to share some really exciting data with you to show you how we use that particular data and how we can uncover massive opportunities. In fact, I'm going to talk about a case study, a 78x trading opportunity. And basically, what that means is for every $1,000 invested, you could have an opportunity to make up to $78,000 in return, and that is not a misstatement. That is true. How many of you would be happy with that type of return? And let's be realistic. What if it was 2/3 of that, or what if it was half of that? What if it was even a third of that? Now, I'm going to show you a simple process that you can begin implementing today. Now, we're talking about a process that could potentially help you make an average of, say, $3,000 to $5,000 a month. I think that could change or have an impact on anybody's life, regardless of where you are financially, regardless of where you are in your financial or your trading journey. How many of you would be happy with that, even maybe a fraction of that? Type in why. Yeah, absolutely, of course. I mean, it's kind of a silly question, but I did want to put that out there. And so I'm going to show you just that. And before we officially begin, I must cover the risk disclaimer. We know trading is risky. There's absolutely zero guarantee past performance is indicative of future results. You must always consult your tax or financial advisor before applying real risk capital in the markets. Okay, so with that being understood, let's get into what we'll be covering today. So this is what we're going to talk about. Talk about how to identify extreme market moves to generate big profits, such as $78,000 by only risking $3,000. We're talking about how we utilize government data to follow the smart money using predictable and repeatable patterns. We're going to talk about why trading popular stocks like Google, Tesla, even NVIDIA is causing you to lose huge profits in the markets. And then most importantly, I want to talk about how we identify what we call X marks the profit, and X marks the profit on the trading roadmap to 100,000 US dollars. And we're going to do all this through what's called the COT, or Commitment of Traders Report. Let me see, type in COT if you are familiar with the COT report. And if you're not familiar, type in C. Type in C if you're not familiar with the COT report. Now, this report, I don't know who here has tried to learn this, tried to decipher. 2 words: good luck. Good luck. But this report is key. This is actually the treasure map that I will be referring to find what we call X marks the profit. So we're talking trade examples like this. This is a chart of corn futures. Okay, this is a $9,000 per contract opportunity. And when I say $9,000, I'm not talking about a $9,000 investment. Okay, we're talking about a maybe $1,500 to $2,000 investment. How many of you in this room have $1,500, $2,000 to invest that could potentially return $8,000, $9,000, $10,000, $12,000? I mean, we would make that investment all day long. I mean, that's a hell of an ROI. So I'm going to talk about it and share some opportunities just like this in the end. If you could put up maybe $1,000 or $1,400 or $2,200 with the opportunity to make $8, $10, $12, $15,000, I think we would do that over and over again. This is what we were able to do in the sugar market. Okay, this is what we were able to do in the sugar market here. Again, this was a $7,100 per contract opportunity. Depending on how you played it, may have cost you anywhere from $800 to maybe $1,400 per contract. Now, I want you to look down at the bottom right here. Okay, what you're going to see is some squiggly lines. And right now, those look like squiggly lines to you. But to us, this is the most important and most informational and impactful tool that you could ask for. And listen, most people don't even know it's available. And the fact is, it's not available to them. And I'm going to share with you, and I'm going to show you why it's not. But what we've been able to do is turn all of this squiggly line, looks like your toddler got a handful of crowns, but we turned this into a simple, readable format. And what this does is it allows us to find what we refer to as X marks the spot. And here's another example that I alluded to earlier. Why? Because of a few squiggly lines, a $3,000 investment had the potential to turn into $78,000. Now, we call these right here year maker opportunities or home runs. They don't happen all the time, but imagine only catching one of these a year, maybe two of these a year. I think you would be really, really happy with your trading results and probably crush what you did the previous year. Now, we're not the only ones doing this. You know, we have extremely happy people. We have students having success. And the way that this is possible is because we follow a roadmap. And what we've designed is really what's called a system. And I'm not talking about some, indicator or robot. I'm talking about a system designed to save yourself time, energy, and money. And that really is the most important thing. Most people pull up a chart in hindsight, very easy. You say, gosh, I really wish I was able to catch this trend. If I would have bought here and sold here, it's very easy to look back and see those opportunities. Well, what I'm going to do, my goal here today is give you the information that details all of this in advance to make this a reality, for this people in the room, rather than pulling up a chart and ended up here and missing the opportunity. This is an example of putting up about $1,500 of total risk with the opportunity to make close to $11,000 per contract. Most people in this room here are looking for investment education. I assume that's why you're here. Most people here have $1,000, $1,500, $2,500, $5,000 to risk to be able to get $5,000, $8,000, $10,000 in return. And that's what you're looking for. I know that because I've talked to a lot of you. How many of you agree with that statement? That's the information that you're looking for to be able to help generate these types of returns. I mean, here we are in a new year. Now is the time to take action. And we're going to be using a time-tested, proven system using government data that has been around for years, but in reality, you didn't know it was available and you probably didn't know what to do with it. Who's guys been going on for the last 10 minutes? For those of you who don't know, my name is Silas Peters. I'm a veteran trader who cut my teeth at the Chicago Board of Trade. Now, I've traded some of the biggest markets for hedge funds, banks, commodity trading advisors. Most importantly, being a trader, I'm a husband to my college sweetheart, and I'm a proud girl dad to two beautiful daughters. And trading affords me to live a truly blessed life where I get to live at the beach, travel, and most importantly, be present. Now, I've had the honor of coaching thousands of traders just like yourself who've gone on to achieve some great success stories in the markets. Literally thousands of retail traders like yourself. And what we've done is identified a trap or a mistake that most people fall into. Because Hubert and I, we have been collectively educating folks for over 40 years together. And this is really what we found, is it starts here. Most people, they go out, they hunt, they find a strategy. Now, some will create a plan, if you want to call that, but then they'll trade that. They'll trade that system or that indicator or that strategy. You know, they'll have some wins, but then they have some losses, okay? They get down here, they suffer some losses, and so what happens? You say, well, that system or that indicator or that strategy sucks, so I'm going to dump that strategy, and then I'm going to get back over here on the hamster wheel. We call it the retail trader cycle of doom. Find a strategy, create a plan, you trade it, you have losses, and you dump it, and you get back on the cycle. And this is terrible, but it's the plain reality. Okay, it's the plain reality. Look, I think we're all guilty of being there at some point. I know I am, and I'm going to talk about a quick case study here. This is another problem that I see time and time again. Let's look at Google. We call them Google heroes. Why? Because they come in here and they buy the dip. They buy the dip on Google, bought 10 option contracts. They make quick $1,400. Okay, they're doing good. Google retraces back. They buy the dip again, 10 option contracts. They make $1,100. They're high flying, wheeling and dealing. Then they come in here. They buy 10 option contracts again. They make a quick $2,100. Okay, it's like a printing press. Okay, 3 trades, $4,600. But with each trade, you're risking $5,000 US. So what happens when you lose your next trade? You wiped out all your profits. How many of you in this room right now have fallen into that trap? Maybe have seen that trap. Maybe you've been there, done that, got the t-shirt. Okay. One loss takes all your profit away. You're risking $5,000 to make $4,600. So, you're winning 75, 80% of the time, but you're still losing money, and that's the problem. Tesla. Most people bought Tesla because maybe they like Elon, or maybe they heard Jim Cramer said, buy here, 10 option contracts, $2,300. They're taking their wife to the Sizzler. To Tesla retraces. They buy 10 option contracts. I made $850 a day. I can buy a little Bobby, his new baseball card. Here we go, retrace again. This time, load up on 10 option contracts, 50% move, $2,800. We are now flying. 3 trades, you're up $5,900. Get you motivated to keep going. You're bragging at the cocktail party, but you're risking $5,500 or so per trade. That's your risk. You see how this is completely upside down? Now you're losing basically 90% of the profits in a single trade. I know this happens. I know this happens because I've talked to many of you face to face many, many times. If that's what you're doing, you really need to stop. And what I want to spend time here over the next 20, 30 minutes is showing you how to follow the smart money. Be practicing what the smart money is doing. You need to be focusing on what they're doing. Why? Because the smart money are the ones that control the financial markets. And if you are familiar with myself and basically any of my methodologies, you know that we are following the smart money breadcrumbs, the smart money footprints in just about every strategy that we utilize. And so the expectations here, again, I know this because I've talked to a lot of you. We've been in this game, this business for a long time, is that folks are going to come in here. They're going to gunsling 400 trades a month. You're going to make about $4,200 probably before commissions. That's not going to be from us. It's not what this workshop is about. What we are focused on here by following the smart money is we're looking for about 18 to 25 trades or so a year. And we're going to target about 100,000 US. And often it's much more than that. What we're doing is we're looking for quality versus quantity. We are looking to trade less to make more, and that is the reality of where most folks, and probably a lot of folks in here, need to be doing. Quality, trading less to make more. Now, if you want to go over here and hyperscalp on a tick chart or a 1 minute NASDAQ chart, by all means do it. But this is something you're going to want to put in your back pocket. And the way that we do this is through what's called the Commitment of Traders Report, or COT for short. And what this does is, this is a report produced by yours truly, the US government, but it tracks the net positions in markets that we use and consume every day. Crude oil, unleaded gas, cocoa, sugar, coffee, markets like cotton, cattle, hogs, wheat, corn, soybeans, everyday items. Who put on some socks today? Who's already eaten a cheeseburger for lunch? Who had a ham sandwich? Okay. The way that we track these physical, consumable, hard asset items is through the government. Let's break down who these government players are. Now, we do have the 800-pound gorilla, the SEC. We all know who that is. This is the federal agency that regulates the U.S. and securities and option markets, physical, electronic exchanges, advisors, and they're there to protect investors, to maintain fair, orderly, and efficient markets. And then we have another federal agency that you may not be familiar with, the CFTC, Commodity Futures Trading Commission. This is the arm of the government, which is an independent agency that regulates the derivatives markets, such as futures, options, currency swaps. And it is the CFTC who's responsible for publishing the Commitment of Traders Report. And so what this does is it presents the U.S. futures markets as transparent and a transparent financial instrument. Compiled and published by the CFTC. What this means is that traders are required to report their open positions to the CFTC in markets where 20 or more traders are active and are equal to or above the reporting value set by the CFTC. And essentially, it's reporting the positions and net positions of the big market players, the participants who really have an impact on the prices in commodity markets. And we're talking about the big boys or the smart money. Now, this report, by the way, this is a real snapshot of a COT report. And my humble opinion, it's a complete hot mess. This is like, my brain scrambles. It makes me want to grab a drink. It's just a headache. And you could literally print this off every single week for 50 some odd markets. And if you wanted to do that, it would take a small army of people to kind of filter through. But the most important takeaway are the three primary participants and their positioning. Okay, so we've got three primary participants: non-commercial, commercial, and non-reportables. Okay, don't worry, guys. We're going to break this down so where it's almost first grade easy. So commercial traders are known as hedgers, and really why commodity markets were created in the first place. So they participate in the futures market to hedge a commodity they own based on, say, current and supply level. Okay. As you can see here, this report is for corn, and a good example of a commercial in the corn market would be something like corn suppliers. Think of Cargill, think of Archer Daniels Midland, companies that are growing, planting, farming physical corn in the ground. And they need to hedge their future sales by selling corn futures to lock in current prices. And commercials, not all the time, but commercials are often short because they're hedging a product that they physically own. Okay. Now, the other group here is what we call non-commercials. Now, I want you to pay very close attention to non-commercials. These are known as large speculators. large speculators, and they are trading position size large enough that require reporting to the CFTC, and they are speculating in the futures market rather than hedging. So take a note, non-commercials are smart money. And so the most common example of large speculators are hedge funds, large banks, large investors. You also have, say, commodity pools and CTAs, which are commodity trading advisors. Those are also included in this category. And then you have the last group here, third group, called non-reportables. These are small speculators. These are the remaining traders once you take total commercial positions and you remove all of the large specs. Now, small speculators, we're not too concerned about their movement. Now, they're part of the report. They're the third part of the group. That's why we need to talk about them. But their position size, again, is not large enough to be reported to the CFTC. But since the COT report is a zero-sum report, any positions remaining after the large specs have been considered would be owned by small traders, or what we call the small fish. Now, what about this actual data? Where do I get it, and how often does it come out? Well, go ahead and go to your calendar, mark up Friday at 3:30 p.m. Eastern. This is when the weekly COT report comes out. Every Friday, 3:30 p.m. Eastern. You get this and can be accessed through the CFTC.gov website. Okay, great. Got it, but exactly what does it do and what does it tell us? So when we break this down here, you know you've got non-commercials here, you've got commercials here, and you've got small specs here. What we're doing every week is we're extracting this data here to determine the net positions of these core groups. And as we can see here, in the non-commercial section on the left, we can see that these guys are net long 330,000 contracts, okay? This is the group that we want to focus on, the non-commercials. They're known as the smart money, who can literally push the market up or down. And that's what we're doing, is we are attempting to follow the smart money. Now, here are those players that make up the report. I love visuals, especially when you start getting into the COT world. But we've got commercials, non-commercials, and non-reportables. So remember, commercials are your producers and your processors: Tyson, Hormel, Hershey, Cargill, Exxon, Delta. Non-commercials, your funds: BlackRock, JP Morgan, Bridgewater, PIMCO, other hedge funds. And the non-reportables are the retail traders, the guys and gals, the dudes trading NVIDIA on their Robinhood app, that kind of thing. And you can see that we've color coded those down here. We've got commercials in red, non-commercials in yellow, non-reportables in blue, okay? Now, what about this X marks the profit concept? We've added another line or another color, and it's called open interest, and it's here in purple, okay? And what we are looking for is open interest crossing non-commercials, like we see here, and like we see here, and again, like we see here. And what this means is opportunity for you and I. So every week, remember, the report comes out once a week. We don't have to watch the markets at all. All we got to do is check it once a week, or X marks the profit. We get the report, we compile the data, we look to take action, and we provide that to our community. And our community gets results. How many of you would be happy to receive information on a Sunday or Monday and have exactly the knowledge of what the COT and the smart money positioning looks like. So you know exactly how to start prepping and positioning for your week and weeks ahead. And what we're doing is we do this by following a process, okay? We're looking for these single opportunities that might lead to a double opportunity, that might lead to a triple opportunity. And you see these right now, and you say, you know, well, this doesn't mean a hill of beans to me, but what it does mean is results. And I think most people want to know, you know, what's the end goal in mind? Silas, what's the end goal? Well, the end goal of mine is to make money. Why else are we in the markets? And we're not talking about trading every day, but we're talking about finding these singles and these doubles, occasional triples and home runs, like a $28,000 per contract move here, $5,700 per contract move here, $11,000 here, $3,600 here. Guys, this is 4 trades in one market. Think about compounding that across, say, 20 other markets times 4. How many of you in this room be pretty happy making $48,000 on 4 trades? Yeah. So that's what I talk about. What I mean, what we're looking to accomplish is quality over quantity. Now, if you can't tell, I get very excited and passionate about this stuff. Get very passionate and excited about this stuff. And we've taken it a step further. A lot of folks wonder, you know, gosh, I don't trade commodities, not interested. I can't have 40,000 pounds of cattle delivered to my front door. We need to have an open mind because this is not just for physical commodities. In fact, we use this for the indices, interest rates like 30-year bonds and notes, currencies. The NASDAQ, a $56,000 opportunity by recognizing X marks the profit. Now, you could have put up $1,800 or so for a single micro, which means a $5,600 per contract opportunity. Equity and equity option traders. Have you ever heard of Qs, the ETFs? Q options. This is how we attack these types of moves. Let's look at a case study here. Very specific case study. Anybody remember what happened with oil? Anybody remember this event the day oil went negative? Now, if you knew how to track and follow the smart money, you could have spotted this in advance. Nope, nobody, maybe a couple of people behind the wizard curtains knew what was going on or knew what was about to happen. In fact, I think more than that. Prepping for shorts before anyone else knew that oil was about to take a nosedive to a negative $38. Now, what precisely were we looking for? Well, if we're looking at COT data on a week-to-week basis, can you take 5 to 10 minutes out of your day on a Sunday or an early Monday morning or a Friday afternoon and check the COT data? The answer is yes, we can. We see non-commercials, i.e. large specs, resting at extreme levels. Can everybody see this? Resting at extreme levels as identified by a level of 100 on our custom and proprietary table. Extreme levels to the long side. We can all see that. The commercials at the exact same time were resting at extreme short levels. Can we all see that? Extreme short levels identify it as a reading of 0 on our custom proprietary dashboard. The answer is yes. Now, while we have these 2 major players sitting at extremes, we now see open interest starting to tick up at also from extreme low levels. Open interest starting to tick up on top of non-commercial selling ticking down provides a massive clue for us. It tells us that increases in shorts are picking up, and now we have an open interest cross of non-commercial selling. Type in X if you can see that in the middle of the screen where we have open interest crossing non-commercials. Type in X. This means we have selling pressure starting to snowball. And as we see on both free price and chart data, as well as free public COT data, we see crude move from $40 a barrel to negative $38. Think about that. An unprecedented move in history. But smart money knew it all along. And for most people, this is just intangible information. But it's available for you for free every Friday, but most people just don't understand what it is. That's where we come in with our 40 plus years of experience, helping you understand this process and how we educate you in a very readable, simplistic, understandable format. I want you to take a moment about what a trade like this means. $78,000 move. Think about catching a third of that, a quarter of it. These are trades that could change a lifestyle. The airlines made out like a bandit too. Remember, they carry inverse positions of the non-commercials. They were buying crude on the cheap all the way down, locking in dirt cheap prices. Crude down at 5, 10, 15, 20 bucks. Where are they now? 72, 73 bucks. They're hedging their oil interest. And so the overall goal would be flying high. Now, up to this point, it may sound confusing, COT data. Fact of the matter, it is, but it's not confusing to us. And what we do is we help people find these ideas and we send these ideas to them every single week. And we send these ideas to them using our proprietary COT software dashboard. Now, if you are in the least bit interested in finding out more about what it is we're doing and interested in getting these ideas sent to you on a weekly basis, drop your number into the chat so we can have a conversation. Look, there's no obligation here, but type your number or drop your number into the chat if you would like these types of ideas sent to you on a weekly and monthly basis. And we're talking about folks that are in our program that are having success. And these are this is just a small snippet here, small snippet of what we publish in our Telegram rooms. In fact, we took a $2,800 per contract move off the table last week, and we're positioned right now as we speak in a few markets. And I cannot wait to show you what we're looking at here coming into the rest of the week. And the thing is that I'm with you every step of the way, right? I'm putting my money where my mouth is. I'm trading and tracking and following, and I'm with you. I'm swimming with you with these commitment of traders ideas from start to finish. Because I believe you need a guide. I believe you need somebody in there with you who's actually doing this with you, okay? Now, this is another fact that I know is that most people get burned out trying to do this on their own, okay? You're trying to day trade FANG stocks. Oh, I'm in NVIDIA, I'm in Apple, I'm in Google. Can't keep up. You're scalping the NASDAQ. You're probably breaking even. You're probably losing. You're utilizing piss poor risk to reward. and you're flat burned out because at the end of the day, you have nothing to show for it. The fact is that 90% of retail traders, if not more, lose money. I want to change that action and those results and that mindset, this mindset. Most people here, are going through or suffering at least one or two, if not all, of these in some form or fashion. I want to show you how powerful this is and really hone in on why the smart money is so important. This is another case study. Okay, we actually work with some folks. I've got folks on my team that live in Ukraine. God bless them for what they're going through. But let's talk about this in a trading perspective. And when Russia invaded Ukraine, there was a huge opportunity. And let me explain what happened. The start of this war, remember, the invasion was in February of 2022. War and politics aside, there was something going on beneath the surface in the wheat market. What does wheat have to do with Ukraine? Well, Ukraine is one of the world's largest exporters of grains, wheat being one of the primaries. When Russia invaded, its naval vessels blockaded Ukraine's ports, trapping approximately 20 million tons of grain, which resulted in soaring prices. When I say soaring prices, I'm not talking about some small fry 2-3%. I'm talking a 67% increase in just a matter of a couple of weeks. And this is what we mean when smart money gets ready to move. They move the markets in big fashion, and they can be downright explosive. Wars or not, was there any possibility of predicting a potential upside move ahead before it happened? The only way that I know that this could have been done is utilizing COT data. Utilizing COT data to possibly provide those valuable clues. So let's go look at what the data was telling us. Commercial positioning. Where is commercial resting? Pop quiz. I want to see who's paying attention. Where are the commercials resting? Yes, at extreme levels. If you aren't utilizing our software, how would you know that this is extreme? This is what we've been able to put together. Not only that, but COT, non-commercial positioning, also showing extremes during the exact same week. What does extreme mean? We're at a position of 0. Non-commercials, aka smart money, hint, hint, smart money right here in the bottom right, had been selling and they were net short. We can all see that visually. And in the same time period, we also see ticks up in open interest. Open interest in orange, open interest ticking up. Now, if you'd recognize what is going on here and entered this trade risking approximately $1,500, you could have seen a $28,000 move in under 30 days. COT data did not let us down. Once again, X marks the profit, did not let us down. We exploded over $5 higher for almost $30,000 a contract. Johnny Retail didn't know what was happening in early February. Little Susie Retail didn't know what was happening in early February. But Sammy Smart Money sure did. You're probably thinking, what about indices? I don't care about wheat. Well, if you didn't care about wheat, you might care about it now. You're probably thinking, what about indices? S&P, NASDAQ, bonds. Does this strategy work on those markets too? The answer is yes. Can you follow the X factor? In the S&P 500, probably scalping S&P right now as we're talking. Non-commercial, aka smart money, has been shorting the market on a tick up of open interest. This is selling pressure coming into the market. That led to a 420 point or $21,000 move to the downside. Anybody here trade SPY, SPX, STS, and so forth? Could you have bought put options? Could you have sold bear calls? Can you follow the X factor? What about the currency market? Does COT work in currencies? The answer is yes. Can you follow the X factor? Euro currency, non-commercials coming off extreme short positionings, open interest cross. We're getting the snowball effect kicking in. That led to a 1,300 point or $16,000 move to the upside. Could you have traded the ETF, FXE? Could you, forex traders, trade the Euro USD? Could you have traded micros? Yes, yes, yes. Can you follow the X factor? Silas, this is amazing. I trade bonds, though. I trade 10-year notes. What about those markets? 5 years. Yes, yes, and yes. Can you follow the X factor? Bonds have been getting smoked. Who cares? Smart money have been selling, selling, selling. We see it open interest crossed. But bonds have already made their move, right? I'm too scared to get in. Bonds have already made their move. Not yet, according to the COT, the smart money data. Here is where we had X marks the profit. Bonds trade another 15 handles, which is 15 points, which means $15,000 per single contract. Equity traders, you trade TLT, TBT. Do you see how what we're doing here is not limited to physical commodities? We've got folks that use COT data alone just to trade equities and equity options. Doesn't matter what you trade. So what's the conclusion here? The conclusion is follow the smart money. And I just showed you how to do it. Now, who here wants to learn how to do this? Who wants to learn how to do this? Or better yet, who would want weekly guidance from myself where I share cherry-picked ideas for you? In fact, we're going to be coming out with another cherry-picked idea probably tomorrow after the FOMC. Who would want cherry-picked ideas on a weekly and monthly basis with a complete breakdown and analysis of the market or markets we're looking to position into? Drop your number into the chat if this is something that not only you think you need, but you know you need to have success in 2025. Guys, it doesn't matter if you're scalping on a daily basis. I don't care if you're trading stocks, because that's what you were taught how to do. Why would you not want to put this in your arsenal? A complete breakdown and analysis in your own software on how to do all of this yourself, but with weekly continual guidance and support. Now, we've been able to put together an incredible package. We call it the COT Insider. COT Insider is an underground project that we worked on for over a year. This is something that I initially built for myself because, look, I've known about the commitment of traders data. You probably knew about the commitment of traders data, but you didn't know what to do with it. And I want to show you how exciting this is here momentarily. In fact, type in COT if you want me to just go to the software right now. I can't even stand it. Type COT if you want me to go into the software right now. Okay. So we've broken this software down into 3 core segments, okay? Can you guys see my screen? Can you guys see my screen here? All right. So inside of the COT software, we've got this broken down across all of the major markets that the COT tracks on. Indices, rates, metals, energies, grains, softs, meats, currencies, even crypto, even sector ETF futures. And we can quickly come down and see which of those markets are at extremes and or which markets have made our infamous X marks the profit. And not only that, we can see the seasonal data of that market. When we align X marks the profit with seasonality, seasonal expectations, guys, we have something very, very powerful. Very, very powerful. And instead of going through each of these markets, we even created a custom dashboard that gives us COT extreme rankings immediately for us. We also get top 5 non-commercial longs, top 5 non-commercial shorts, and we can see where we have X marks the profit appearing in front of our very own eyes. And we also take, this is something very, very powerful. Remember, this data comes from the CFTC. If we come over here and we go to commitment of traders, I'm going to show you what that looks like, okay? Here is what this looks like. If you want to download this into an Excel spreadsheet and spend the next year pouring over 1 week's report, by all means, have that. I'll even send you a bottle of scotch so you can at least sip on while you're going through this data. But what we've done is we've taken all this data here and we pump it into our own dashboard. So we can now go through indices, rates, metals, energies, grains, and look for the positioning here on a week-by-week basis. Guys, there's obviously more to this, what we do, and this is what part of what I share every single week, what I do on my weekend. I absolutely love this stuff. I pour through this data so I can find those cherry-picked ideas and deliver those to you. And we've got some layups in the making. And what we have called this software in this dashboard is COT Insider. So what I would like to invite you to is to join us and become part of the COT Insider team. What does becoming part of the COT Insider team looks like? Well, you're going to get access to the COT Insider chart and scanner software that I just showed you, which includes the dashboard. This is the dashboard suite that we spent thousands of hours on with programmers and data teams to build from scratch, a significant financial investment for us that took over a year in the making. And now we've come to a point where we can share this with you. That aggregates all of the CFTC.gov data each and every week, puts it into a nice, easy, readable, and understandable format. Not only do we get to see extreme positioning snapshots with the click of a mouse, but we also get to view the net position changing week after week after week, which eliminates the need to keep countless spreadsheets and journal entries for 35 plus markets. This data alone has been responsible for identifying this trading gold. Take the example of gold futures. Gold had been heavily sold off. You can see we've been sitting at extremes. But COT, our COTX Extreme Smart Market Scanner, we see the smart money started accumulating positions. We see open interest starting to tick up. Commercials actually started selling, hedging their positions. And this open interest right here is picking up steam on smart money buying, which of course leads to, you guessed it, X marks the spot. That's where X marks the spot. That was a $28,000 per contract move. Not only are you getting the proprietary dashboard and scanner, you're also going to get our COT top 5 extreme position listing ranker. What this does is quickly point you in the right direction of the best marks to trade each and every week, which saves you hours of endless market research. Our proprietary calculations gives you an instant read of the most extreme level, whether you should be looking to go long or looking to go short. Market tops and market bottoms are accompanied by extreme levels of buying and selling that give you the perfect opportunity to capture major swing moves. Here's an example of our top 5 extreme position rankings. In fact, our top 5 extreme ranker identified this setup in corn, brought corn to our attention. Non-commercials, aka smart money, were at extreme levels, and then we start to see buying. Corn forges a near-term low right here and pops a quick 75 cents or $3,700 per contract. You could have traded corn, ETF, no excuses, because you don't trade futures. You're also going to get our COTX Extreme Scanner. Remember, X marks the profit. This scanner locates those exact markets that are ready to pop. You're also going to get our COT Insider Weekly Report, a complete video and market breakdown analysis of markets gearing up for smart money moves. You're also going to get my commodity crash course and our COT surge signals and alerts. Everything you're getting today as a founding member has a total value of over $7,200. Now, I've shared numerous examples and case studies of real-world trade opportunities using COT data and following the smart money. Trading a mini or a micro or a single option contract on any of those examples, I would bet to say would have likely made your year. We want you to have the same opportunity. You're not going to find software like this anywhere because it doesn't exist, nor are you going to get the trade ideas and the follow-up and the education and the support anywhere else because it doesn't exist. And you can get started today, become part of the COT Insider team for a one-time payment of $14.97. Now, you guys can go to tradetrinity.com/COT. You can also call 502-383-1182. Now, we're opening this up to 15 new members. Trades like this can not only possibly salvage your trading year, but possibly your trading career. Okay, imagine when you find setups like this. We've got X marks the profit. We've got X marks the profit. We've got crossing from extremes. Trades like this in the British pound. We literally got on the top. I don't think we have but maybe $50 of potential drawdown, $2,500 move to the downside. Here we are in soybeans. Large specs have been net short, but on 6/30, we see our first uptick off the extreme position table. That led to a move of $7,400 per single contract. Guess what? There's a ETF called SOYB that you could have traded. Think about this, guys. If all this did was give you the ability to trade less and make more without having to chase NVIDIA and chase the latest quantum computer stock, allowed you to not miss out on any of the extreme opportunities, would it be worth the investment? Would it be worth the investment to have me trading alongside you? Absolutely. Here is your complete offer, guys. You're going to get the COT Insider Chart Scanner software, COT Top 5 Extreme Position Listing, COTX Extreme Scanner, Insider Weekly Report, Commodity Crash Course, and our COT Surge Signals and Alerts. One-time payment of $14.97. We're opening this up to 15 members. Guys, we've also done a deal with PayPal. A lot of you folks like to use PayPal. You can finance this thing 0%, $99, as low as $99. You'll see the blue order button on the, or blue button on the order form. And here's your offer, guys. Again, you can call 502-383-1182. And what I want to do is, not only do I want to take all of your questions, but I also want to dive into this a little bit more. And I want to give you really an unannounced bonus. What we've done is we've come out and created our COT surge indicator. You guys see this on the bottom. Okay, so what we're doing is we're now able to track the non-commercials, the commercials, and the specs, as well as open interest, just like we see here. Look at non-commercial selling coming down in blue, commercials buying going up. Look at the open interest with non-commercial selling. That is what we call the snowball effect, and why we got short sugar right here. We sold sugar here. We covered sugar here. In fact, we're looking for a new opportunity. Now, how do we use this data? How do we use this data? I want to show you some very interesting information right here. Look at what happened over the last week. And I want you, when you look at this data, I want you to ask yourself, or I want you to dig deep into your memory bank. Do you remember what happened Sunday on Sunday's Open? Do you remember what happened yesterday? Look at what we happened going into Friday. We saw large money, smart money, large specs short 50,000 contracts of the S&P 500, taking their net position from 37,000 contracts net short to 80,000 contracts net short. What kind of signal does that tell you? That is a bearish signal. Do you have to have a futures account? No. As I've showed you, you can trade ETFs, you can trade options on ETFs, you can trade options on futures, you can even trade minis and micros. We've got lots of students that will trade COT using minis and micros and do a bang-up job. We've got several students that trade and use COT Insider and trade ETFs. And we have a complete resource and guide inside our members area. We've got a complete symbol guide here. We give you an ETF or ETN for every market that there is one. So whether we find ideas in metals, whether we find ideas in energies, whether we find ideas in indices or grains or currencies, if there's an ETF, we will provide that. And if we trade options, we will also give you an option idea. We do have lifetime options, yes. So what is the average risk? Depends on how many contracts you're trading and what contract you are trading. If you are trading a full size, a micro, or an ETF or option, that risk is going to vary. John, those examples were for one single contract. Yes. Lynn, I'm not sure. You don't need TradeStation. You don't need TradeStation. This is a web-based standalone application. Okay, web-based, guys. If you can access the internet, or what I call the World Wide Web that Al Gore invented back in 1995, then you can access the COT data. If you want to sit back and never log into the software, hey, that's your prerogative, and just want to sit back and wait on Telegram alerts from me, that's fine too. What I'm looking at, another market that I just shared with you in sugar. What I'm looking for in sugar here, what I'm looking for is The smart money or large specs have gotten heavy short. They continue to, they're selling in pretty decent size last week. We can see that they've gone from 13,000 contracts net short to 63,000 contracts net short in a 1 week period. In fact, they added 48,000 contracts net short or to the short side. What we do is not just look for, say, X marks the profit or extremes. We will often try and front run smart money, knowing when they get to extreme positions based off where they've been historically. Okay, that was quite a mouthful. But if we know that we have markets where smart money is basically overextended or heavy net short or heavy net long, at some point they've got to cover that position. And a perfect example, I didn't mean to lead into this, but a perfect example is in the interest rate markets. Anybody trade bonds? Anybody trade 10-year notes? Yeah. So we've been watching for, gosh, weeks, if not months, where market participants have been heavy at or near record short positions in the interest rate markets. And look at the position declining. Net position, 683,000 contracts, 577,000 contracts, 531,000 contracts. If your net position is net short, but that is declining towards a value of 0, that is bullish. And we see that in a 30-year bond. In fact, there were 6-figure net short, been on a continual decline. Over last week alone, smart money has gone from 23,000 contracts net short to 14,000 contracts net long. Look at bonds. Look at bonds. This is where we started to see short covering. You can do and track this thing using TLT. All sorts of fixed income ETFs. That's what you want to do. Let's get to our ranker table. We've got some commodities here. No coincidence that we see feeder and live cattle on the extreme. Guys, this is where we really get fancy is what we do. We can see that the smart money are positioned extreme. Smart money positioned extreme. We also know that they are at extreme comparatively to this time in history. And we know that seasonally, cattle is coming into what we call a cycle high, cycle top. And so we are going to be trading cattle. And I will provide that trade to you, and I will try to provide an option trade to you, and I'll provide an ETF trade for you. We pull up cattle. Let's look at cattle. Where are we? Our April live cattle. What we see, we can also identify this in our COT surge indicator. By the way, guys, you get this COT surge indicator right here. Track price, track non-commercials, track commercials, what we call the alligator mouth, extreme positions leads to a decline. We can see the selling going on. If the data updates every Friday, could we use this as a guide for the upcoming week? That's exactly what we do, SP. Exactly what we do. We are just salivating and foaming at the mouth every Friday afternoon for that data to come out. Now, the bad news is that you're not able to do anything because the markets are closing or are closed. But the good thing is that you've got Saturday and Sunday to take about 20 or 30 minutes out of your time, if that, and go to your COT Extreme Ranker table, look at your top commercial shorts, top 9 commercial longs and shorts, go through your legacy data. How long does that take you guys? I mean, gosh, not rocket surgery. Training videos, absolutely. We've got trading videos, we've got guides, we've got resources, we've got a Telegram room, we've got a telephone number hotline you can call, we've got an email address. We break down every little nuance of this piece of software, although, you know, I pretty much showed it all to you here in about 5 minutes. We've got all kinds of good stuff. But the most important thing is don't overcomplicate it. What are the 3 or 4 core things that I've already shared with you? What are the 3 or 4 core things that I've shared with you so far? Come on, guys. We'll give you a hint. What are the 3 or 4 core things? Where are commercials? Where are non-commercials? Where's our open interest? Now, what if we add a layer of seasonality to it? Boom, even better. What if we add our COT surge indicator to it to help us just visualize? Boom, makes our business even better. And what if you have Telegram room access? You've got a weekly video. I send a weekly video where I break down all of this good stuff right here. Yes, Todd, you need to get in there. Telegram room does exist. It's right here. Go to Telegram room. I'll be looking for you. Trading videos, yes, Jerome, all on the left-hand side. We've got getting started videos. We've got a COT playbook showing you exactly videos of me showing exactly how we break this down. If we come over to, let's see, where is it? Crash course, contract guide, case studies, surge signal case studies. All right, we'll get in there and hit me up with any questions. Your days of going here and scratching your eyeballs out are over. Go to tradestraining.com/COT. Call 502-383-1182 or email support@tradestraining.com and become a COT insider today. I can't wait to have you on as part of the team. I've already given you 2 big clues, guys. I showed you what we saw in the S&P. I showed you what we saw in the 30-year bond. That's just scratching the surface. You're welcome, Jerome. I always appreciate you. Thanks, Dan. Thanks, Todd. Taza, I'm not sure how to pronounce your name. Got your number. We'll follow up with you. SP, thanks. Lyd, Bruce. Thanks, everybody. Thanks, Wendy. Thanks, David. Guys, have an incredible week. Stay safe out there. Can't wait to have you on the inside. Be safe, and we'll see you on the flip side. Talk soon.